Well, hello and a very warm welcome to another video from Real Tail Trader. My name's Simon Gray and I am a retail trader. That means I trade from home on my own account. And of course the name of this channel is Real Tail Trader. The idea behind that is for me to share some of my experience over the last probably 5 or 6 years trading on and off, and certainly more seriously now in 2019, to tell the real story of what it means, in my opinion, to be a retail trader and how to navigate the currency markets in the right way. Again, in my opinion, just a caveat: this is not an advisory channel. I'm not suggesting you buy or sell anything. It's not a signaling service, if I can say that. So if you are thinking about getting into Forex or currency trading, then please consult somebody in advance. Don't just dive in. It's one of the fastest ways to lose money if you're not sure what you're doing. The idea behind this channel is for me to just share some of the things that I'm doing to act as, I guess, some insight into how a retail trader operates, how I operate. But my approach is very personal to me. That's another important point when it comes to trading. It's very easy to go online and to see all these education products advertised and whatnot. This trading system, that trading system, and that generally is a route to the poorhouse, because trading is personal. And what I've discovered over the years is that you have to find a trading strategy that fits with your personality, which sounds a little bit cryptic, but it is very important. And I'll talk about that more on a future video. But today I'm talking a little bit about winning and losing. Yes, you have to lose if you are a currency trader. It's inevitable. I'm talking about winning and losing in the currency markets. But before I do that, I'm going to throw up a couple of things on the screen. I'm just going to share with you some of the stuff that I do on a daily basis. I tend to get up pretty early, 6 o'clock. I'll make a coffee, have breakfast, come up to my office, and then I start to do my market analysis. And my market analysis, I look at the 15 currency pairs that I trade. The majors up here, these are the major pairs against the US dollar, and then we have the cross pairs, or I like to call them the synthetics, which are made up of well, not US dollar, so cross pairs. So for example, pound, we've got pound dollar up here, we've got euro dollar up here, but then you have a synthetic rate, which is for example, where are we, euro GBP here. So that's the euro trading against the pound. So if I bought euro GBP, effectively I'm buying the euro and selling the pound. So I look at the various time frames. I look at the moving averages. This is one of my major ways to analyze the market. Is it above or below price? That is above or below the moving average. B here means buy signal. S means sell signal. I put some notes down here which I evolve throughout the day. I tend to trade on a 4-hour chart, so I'm looking at things every 4 hours. Means it doesn't take up too much of my day. The main body of work, which is about 2.5 hours, takes place first thing in the morning. And then here I have a record of my trades. I also have a record of my trades over here, the risk I'm taking, the reward, what I've, how successful I've been. This is my daily analysis of relative strength. I'll pull that up in a second, and then I have correlation risk. So if you were to buy pound dollar, euro dollar, and sell the yen here, USD, JPY, and sell the Swissy, effectively you are selling 4 lots of dollar. If you bought Australian dollar as well, Aussie here it's called, AUD USD, then effectively you would be exposed to the dollar 5 times. So I look at my correlation risk here, because if there's a spike in activity, let's say in the dollar, today at 1:30 there is the non-farm payrolls result out, which can have quite a significant effect on the dollar if it surprises the market. So you have to be careful, and I like to monitor my correlation risk. Let me just pull this across from the other screen. This is my relative strength analysis, and this is what I do every day. I look at the currency pairs in relation to one another, which is faring stronger compared to the other, and I rank them accordingly. I look at the overnight strength, and I'm looking here for a change. These are points or pips, a change in points or pips of above 25. It gives me a clue as to what the consensus is, where the strength is, and the strength this morning, 6 a.m. was with the pound. And then I look at something called I call momentum. So I'm looking to see, okay, of these pairs that have an overnight strength of above 25 points, what's the momentum in those pairs? Is there a buy signal here? So, for example, and I'll throw this trade up in a minute. This morning I looked at the pound Swiss franc. It had moved overnight. It had moved up overnight by 27 points, and then between 6 and 7 a.m. it had moved in a positive direction, and between 6:30 and 7 a.m. it also moved in a positive direction. And then on the daily chart, the price of this pair was above the 10 exponential moving average. And let me just show you that here. So here we go on this pair. I'm using a Trade Navigator platform here, which I get from the States. So if we look at this pair here, if we look at the daily chart, it was just peaking above the 10 exponential moving average here. It hadn't closed above, but it was peaking above. And then this morning, you see this momentum here. This is the where are we? That is the 6:30 candle, well, 6 o'clock candle there, 6:30 candle there on a 30-minute chart, which I was looking at, and you see the momentum here, given the signal on the daily as well. This was an XY signal on the 30-minute chart. This is one of my proprietary signals. So it looked to me here, according to my rules, and you have to trade according to rules, that there was some momentum to take it up to this point where I take off half my position and let the rest roll, probably into a structure level or a resistance level up here. So a good 2-for-1 risk reward trade. Now that clearly didn't happen. What happened is I put the market order on at 7 a.m. and the market quickly reversed and stopped me out. Now that's a loss. So already I've got a loss for the day, but that doesn't really matter to me, because what I'm not trading is certainty. So I know that every time I put on a trade, there is a chance I'll be right, there is a chance I'll be wrong. The market will tell me. But what I'm looking to do over time is as I make, this is my 7 a.m. momentum trade, as I make a number of these trades, let's say 10, 20, 30, 40, 50, or if I do it every day, if I get a signal, let's say I make 20 trades over the period of a month. What I'm looking for is a probability that this trade more than ideally 50% works. And if it works more than 50% and I'm getting a 2-for-1 ratio, then I'm going to make money on this trade. So I'm not worried whether any individual trade works or not. What I'm more concerned about is over a period of time, let's say the course of the month, 20 days, how many times did I win on average? Did I win 10 out of 20 times? And if I won 10 out of 20 times and I got a 2-for-1 risk reward ratio, or probably, as I'm taking off half the position here, maybe slightly less, 1.5, 1.75 a risk reward ratio. That's what I'm risking between my entry and my stop versus what I'm gaining from my buy signal up here up to wherever the price gets to. And even if I win less than 50% of the time, providing I follow the rules and I'm consistent, and I don't try and cheat my system. There we go. Problem with the internet today. So let's reconnect that. That'll go green in a minute, hopefully. Then I'm onto a winning thing. And it is about following the rules. So now I leave this alone. I don't look at this again until about 3 o'clock this afternoon, when I look at my 3 p.m. momentum trade, and that's it. So this was a losing trade, but doesn't really matter, as I say, because I'm trading probability and not certainty. And I think the mistake people make, and I made this when I got into the currency markets first off, is you're looking for the holy grail. You're looking for a system that works all of the time. And when you take a loss, you then discard your current system and go and look for another system. And this repetitive cycle continues over and over and over again. And it's a losing proposition, because there is no 100% winning system. You will lose in the market, and you must be prepared to lose in the market to be in a position to gain. And the idea is through money management is that when you lose, you don't lose so much that you've got no powder dry, if you like, to trade the moves that go in your favor. And the idea is over time, the probability of your success is determined by your win ratio, it's determined by your money management, and it's determined by your ability to continue to play the game. Because if you've taken all the chips off the table because you've lost, then you've got no chips to play the winning trades when they turn up, and you don't necessarily know when they do turn up. So let me go into now my longer term charts. So without wanting to get too complicated, I tend to look at the daily charts, and I tend to look at the 4-hour chart, which means on a daily chart every candlestick is a day, and on the 240 chart every candlestick is 4 hours. So lost on that short-term momentum trade. Don't do too much day trading. It tends to be over a period of days, but I've got a number of other positions on. So let me just show you those. So first of all, I've got a long position on Euro JPY, Euro Japanese Yen. I bought here. This is a trend strategy, so I'm looking for the moving averages to do something. You'll see the 50 moving average there, simple moving average on this chart is turning up. The shorter exponential moving averages are turning up, and I bought here. My stop was down here where this big red line is. Once I hit my target, which is a 1-for-1, I took 50% of the position off. I've now rolled the stop behind structure. So here there is an element of, I guess you'd call it support. And now what I'm hoping is that, I just shouldn't say hoping, what may happen, we don't want to hope, but what may happen is this is a range strategy that I'm playing. You can denote this by the yellow background that I've put on the chart here. And if I go into the daily chart, you'll see why I'm defining this as a range. It's got 2 touches at the top and 2 touches at the bottom. That's why I'm playing it as a range. So if we get up here, this will be a nice winning trade, but I don't know that. I might get stopped out. But this trade is fully protected. My stop is above my entry, so I will make money on this trade twofold. I took off half the position at position 1, and I have a small margin of profit here if the market reverses on me. So that's a winning trade, whatever happens. Then if I go across to my next position that I have on, this is a trend trade or reversal of trend trade. So this market, which is Euro Swiss franc, has been trending down certainly for the last couple of weeks. It then started to reverse this way. This is the 10 exponential moving average on the daily chart. And if I go into the 240 chart, which is my trading time frame, I have a kind of setup time frame and then a trading time frame. Signals for my trend trade. You'll see the 50 simple moving average is flattening out, and my exponential, my faster moving averages are crossing over, and I bought on that signal. I've added to the position yesterday. This structure held, so it held above this level price. So at 6 o'clock last night, I added to the position, got a little bit of a bump overnight, so I now have an open profit with 2 positions in this trade. When I get up to a 1-for-1, I'll take off half of the position, and then what I'm looking for is a 2-for-1 in terms of distance from my entry to take me up here. Again, don't know what's going to happen. This position could reverse, stop me out. I could lose on that position. Who knows? But at the end of the day, you've got to play the game to win the game. For those of you a bit more experienced, if you're watching this, you might be wondering why I've not put my stop loss below structure down here. I tend to play a bit more of an aggressive strategy on these trend strategies, and my rules say that if I have an X signal or an XY signal here on the buy side, that I can put my stop 20 points below that. So I'm just following my rules. And again, if I follow my rules and I trade this particular strategy on different pairs over a period of time, I will get an indication as to my probability of success and my average risk to reward ratio. So that's what it's about, probability, not certainty. And then finally, just to close out this video, I have got a short position on the Swiss franc Japanese yen. So I'm selling the Swiss franc, buying the Japanese yen. This is a range top sell. So again, I've classified this as a range on the daily chart. I classify it as a range because the simple moving averages, the 50 and the 200, are fairly flat, and they're either side of the range. Sometimes they're down the middle. Price is not really respecting the 10 exponential moving average, and there's 2 touches down the bottom here. There's 2 touches at the top. So if I look at the 240, what I did, I sold one position, one up here. That was on a sell limit that triggered as soon as this price level was hit, just below the even handle. So I sold at 111.90. So I like to put my orders in just below, if it's a sell signal, just below the even handle. You tend to find that, or I tend to find that traders will put their orders in and do stuff at even handles, round numbers. You tend to see a lot of activity there. So to ensure this trade triggered, as it did perfectly, came down. We've now got a bit of a bounce. I've added a second position here. Got a bit of a bounce, but again, you know, I've got a kind of break-even trade now. This position I sold here. This position is in a slight loss, so I'm about a break-even position. But if this is a true trend, a true range reversal top, and I come all the way down here, I've got a 2-for-1 risk-reward ratio. I'll take half the position off here, half the position off my second position here, and then I've got a limit order to take me out of the trade here. So time will tell. So what I wanted to talk about really today, show you some of the stuff that I'm doing. It's a record for me, might be of interest to you, and to say that you are going to lose on some trades. You've got to be prepared to do that. The big mistake the beginner makes, and I made, is trading too big. So if one trade goes against you and you lose, you've lost the money to invest in another trade. So it's all about trading small. Money management, keeping your risk to a manageable level based on the size of your trading account, and expecting that you're going to lose on certain trades. You should always have a positive expectancy before you enter a trade, but you know the market will do what the market will do, and the market will surprise you. The market is much bigger than me. I can't influence the market. All I can do, and this is down to why the psychology of trading is so important, all I can do is control my emotions, control my fear, control my greed, follow my rules, know what my trading strategy is, execute my trading strategy, and monitor the results over time to ensure that I have a trading strategy that delivers a positive outcome. And that's all based on probability, not certainty. So that's pretty much it. I'll process this video, get it up on YouTube. Hope you enjoyed it. If you like this video, then please feel free to hit the subscribe button, hit the notification button. I'm tending to put out one of these videos every day, every couple of days. You can also follow me on Twitter, Instagram, pretty much all the social media channels, and that's Real Tail Trader. So enjoy the day, have a good one, and take care. I'll talk to you soon.